So, first of all, thank you very much for all of you for being here today. We have a great topic to discuss, and we have really great people building in this space worldwide. And yeah, so let's go ahead and let's go into the first question. It's a question that I'm going to do to all of you. So I would love to hear a reply for all of you. And regards the adoption, the current adoption, where we are and how it's evolving. So the question regards how widespread is the adoption of real-world asset tokenization currently, and can you give us some examples about it? So, but first of all, let me introduce Lorenzo Rigatti is the CEO of Block Invest. Philipp Pieper is the co-founder of Sworn. Silvio Ventre is head of innovation at Euromobiliare Asset Management. And Lorenzo Amoroso is operation and strategy at Hercle. Coming back to the question is how widespread is the adoption of the real-world asset tokenization currently? And please, can you give us some examples of real-world asset that you currently working on tokenizing? And yeah, obviously, yeah. So I'll start with Philipp, because you're on the first one on my left side. But yeah, thank you. Go ahead.
Okay, so my name is Philipp Pieper. I'm the co-founder of Swarm. We've been in, today it's called real-world tokenization, but before it was like security tokens and digital assets or whatever you want to call it. But it's basically taking anything that is off-chain, off the original chain. So even if you have a cross-chain use case, that is an off-chain real-world asset tokenization because it's on a different chain, represented on another chain. So the adoption is basically very big. It's, you know, the most successful use case is stablecoins.
Yeah.
Stablecoins is a real-world asset. It's basically documenting that there is something in an account or something representing value. And the same applies to any kind of commodity. So we have gold, Paxos Gold, and others that amount to, I don't know, a couple billion. We have sort of stable coins in the 200 billion minus a little bit right now. But yeah, and then, you know, that goes down the chain of actually becoming more of a sort of a securities evolved, you know, landscape. We as Swarm, we do stocks and bonds, public stocks and bonds. We have a gold product. We actually give our technology to issuers that tokenize funds, that tokenize their commodities, that tokenize any kind of use case, and we give them issuance and secondary liquidity solutions. So it's widespread.
Yeah, thank you. Just to give, I would say, an answer that is not so similar because, yeah, well, I would say the big adoption, as you say, is for sure for stablecoin and also Paxos Gold, etc. But on the, I would say, most financial instrument side, we are also in an early stage. We are gaining momentum. Security token are gaining momentum, but especially in Europe, there is, I would say, we need to have a shift of paradigm that must be changed because right now we have two different legs for securities, traditional securities, and cash legs. With blockchain, the shift of paradigm is having all in just one technology, which is blockchain for sure, that will gain for sure access to, I would say, lots of people, can give like operational improvement and so on and so forth. But for doing that, I think that we need to shift paradigm in a sense of compliance and regulation. Right now is like regulation try to follow the technology, but it should not be like this because otherwise we can risk to have a regulation which is already hold for the technology that we are using. So it's gaining momentum. It's increasing in a much more sense of I would say. Asset under management and for sure volumes, but I think that we need to like step up on that way.
Thanks.
I'll try to be short. It's not easy. Okay, first of all, real world asset is very broad thing. Okay, everyone is talking about RWA, but you can grab a lot of things. Okay, when I started thinking about that, it was a long time ago, the first thing I was started thinking about was real estate, right? Guys, in Italy, in Europe, we cannot tokenize physical real estate. We have notary, we have bureaucracy, we have a lot of public involved. So you should like fire 1 million people to digitize land registry and makes possible this kind of tokenization. So it's huge in terms of cash lag. But just think about, guys, that the traditional finance in one day can move easily, let's say triple of the total crypto market cap in one day. So it's still very small. I think there is a lot of potential in financial asset. This is basically what we do at Block Invest. I was mentioning in the question to the smart lawyer before about the monetary market funds, because I see that this is the closest things to the stable coin. Okay, probably is the, let's say, the easiest things to tokenize in the traditional world that makes sense for the investor, and let me say are also easy to understand for the investor, because we have regulatory issue. We have still, a lot of uncertainty in terms of interoperability. But the thing is, on average, people and also Web3 user doesn't understand properly the financial instrument. So you need to know what is stocks, what is a bonds. It's not just a matter of speculation. You need to understand the underlying asset. So we will face for sure the risk challenges, operational challenges. But the first thing is educate people that real world asset is not just speculation, is the exploit of a new technology, a new infrastructure where every asset is a crypto asset.
So basically everything we have in our world can be tokenized and put on a chain, right?
Could be tokenized,
Could be.
But probably we don't need that.
Okay.
Probably we don't need to tokenize everything. But yeah, many things needs to be tokenized, but it takes time. As we used to say, one block at a time.
One block at a time. Thank you.
First of all, thanks for having me here in this beautiful place. It's fantastic. I would like to start from the lasting point, because every asset should be and could be a digital asset, not crypto, because it's like a broader category of assets, in my opinion, and finance sector speaking, let's say. In fact, I would like to mention some data about it. The tokenized asset market, it's very huge because as of today, the esteemed market for the next 10, maybe 5 years from the Boston Consulting Group, for example, it's like 16, in the worst case, 16 trillion. And only I would say, 5 trillion, it's about investment funds that could be tokenized. So, of course, there is a technology, a new technology that is widespreading all over the world. In Europe, it's quite slow instead of all the world, because the most important example of these tokenized assets are coming from USA, for example. In the next intervention of Pietro, during the questions, Lorenzo mentioned the money market fund. The money market funds are a perfect example of tokenized assets that is widespreading all over the world, in particular in the US. And it's really interesting because it's the match of the traditional cash leg and the new cash leg of the traditional finance that has to become a new traditional finance powered by blockchain. So more or less, there is the state of the art.
Yeah, thank you. It makes absolutely sense. So it looks like when we talk about the tokenization of real world asset, basically the first thing that are currently tokenized are financial assets. when we talk about the value, right? So this is great. This is great. So I have a question for Philipp and also Silvio. I would love to come back to you. And it's the next step. So what is the primary benefit of tokenizing real-world assets? We talked about earlier about stocks, bonds, and other financial assets. What are the advantages of doing this? Thank you.
So I think for years already we've been obviously sort of drinking our own Kool-Aid and believing that, you know, sort of number one, instant settlement is what drives everything. And there's follow-on derivatives that from instant settlement result in other secondary benefits. So 24/7 tradability, fractionalization, instant settlement, global availability, et cetera, et cetera. Everything sort of has to do with liquidity at that point in time, right? So if we believe that basically a blockchain can deliver that, then it releases a lot of capital that would get lost in, you know, the 7 different steps of, you know, of middlemen and market makers and intermediaries taking fees and taking time and taking compliance efforts to do that. So there's a cost efficiency that might result from this. And I'm saying that in a not a factual way, because I think we as an industry still have to prove that out, that that's really the case, right? The second thing is that it's about automation in the wider sense. So automation meaning sort of, you know, compliance can be programmed into a token. It can actually be leading to a much more efficient process of onboarding, on documentation, on actually connecting even data with the asset itself and making that asset better understandable from machine-driven interpretation. So, I mean, the coffee example was a great one because every real-world asset has the same kind of data problem, which means that it needs to be described in a conclusive, non-intermediary way about what it is, and that opens up a huge opportunity to actually build a data landscape that is conclusively connected with that data, with the asset, which in the financial markets cannot be the case. So, good example is if you have a carbon certificate, it might be described by 7 different dimensions of data. And you know, if you only buy that on an exchange, a centralized exchange, you only see the certificate, maybe have some documentation, but you don't understand like all the data landscape behind it. You don't have attestations of how truthful that data is, et cetera, et cetera. So that is probably the second most important piece that is going to lead to the financial markets to actually see this favorably, because then suddenly with algorithmic interpretation, you can actually build different financial products. You can have faster decision making, and you know, foundational analysis can improve.
Great answer.
I would say the same exactly things that Philipp mentioned. So I'm not going to recap all the advantages of tokenization and benefits. Of course, you can make different products and different experience. In fact, in my perspective, one of the most important benefits that we can have from tokenization is the new user experience that you can give to the retail customers. Because in my case, for example, as an institutional, I make product. Nowadays, I could say flat, in a flat way. I mean, of course, there is regulation, risk approach, and a lot of other details that characterized all the assets, the traditional assets. When it comes with tokenization, you can build different products with different experience just because inside of the asset.
Oh, okay. This is... No worries, guys. We are covered. Okay, everything good? All good, yeah. Okay. So I apologize for this.
Very impactful words.
Very impactful.
Wow.
Very impactful,
wow,
man.
Wow. What a strong...
I would say very impactful.
Okay, guys, just move it over there and do not let other people stand under the... I don't know what is that. But
Sam.
well, it's a century building, so basically it was built in 1400, but okay, no worries. All right, let's continue. I don't think that the other ones will fall. Okay. All right. Okay. So I apologize for the...
Sorry for the disrupting words that I was mentioned, because
absolutely, yeah.
so much disrupting and impactful. But anyway,
Yeah,
as I was
go
saying, the most important benefits that you can have through tokenization is the user experience that you can build on the product and inside of the product. So
Yeah.
you can build
Great.
different characterized.
Great, great, great. Thank you. Thank you very much, Silvio. Now I have another question for Lorenzo and Lorenzo. This regards how does tokenization improve access and the role of the liquidity of traditionally illiquid assets. So we talk about the assets that are in the traditional finance. We know that they are hard to move, hard to sell, they are illiquid. So what is the role that the tokenization of those assets impact those kind of assets that are illiquid?
Yes, yeah. First of all, I will say that assets, of course, is gaining with secondary markets on tokenization, which is something that is not so developed right now, but it's going to be there, I would say, in some times. So volumes are not so big. That's why are really important in this stage to have like liquidity providers and market makers that could help the development of these secondary markets. And for sure, fractionability, blockchain, atomic settlement, near real-time settlement, using stable coins and similar are all the advantages of gaining real fast access, and for sure having illiquid asset to be more liquid. But right now there is another, I would say, not problem but challenges in the phase that all the tokenized asset, or the majority of tokenized asset, have a mirroring in the real world. That means that it's on one way it's really easy to like issue a redeem asset, tokenized asset, but on the other way we need to understand that I would say lots of companies have as a reserve the real asset. So
as collateral.
Collateral or reserve. As the real one. Yeah, the real one. So in this way, from one side you can like redeem issue in a moment using stable coins. So role of market makers or liquidity providers can be ramp on, ramp off of digital asset to like fiat money. But on the other side, in order to redeem those type of assets, you need time because they are illiquid on the real part. But clients want money in a fast way because you are giving something, selling that is liquid, not illiquid. So those gap of liquidity from like redeem the tokenized asset and redeem the real asset must be covered. And how can be covered this? Using liquidity providers that can like give you access to lots of liquidity, that give you access to like working capital in order to have, I would say, in a really less cost than a loan access to liquidity in order to redeem all the tokenized asset of clients. Otherwise, there will always be a gap of liquidity, and it's not easy to like create big markets and big volume if we have like a delay of at least 2 days between the redeem of tokenized asset and the redeem of the real financial asset that you have as a collateral. So I think market makers and liquidity provider has a double role in that.
Thank you. Great, great. Lorenzo?
Okay, you touch a great point. We discussed about the actual use cases, even the big one like BlackRock in US. In all these use cases, except one, probably the only one, you have the digital twin on chain, but the registry is kept by the custodian bank. Okay, it's even public on the prospectus. So probably few people knows that the first native on-chain institutional operation are not US based, but were done in Germany and in Italy. That's it. Okay, so we need to be proud of that. I mean, we have a lot of risk associated with this lack of liquidity. It's hard to say after a lawyer, but we have two different regulations. One for the asset lag, that is not even a regulation, it's actually a pilot in Europe, and all the nations are like putting in place their own national regulation. And the MiCAR that is coming, I mean, it's already there for stablecoin, but we were saying before that every asset is a crypto asset, but they need to be matched, okay? I mean, the only way to make liquidity is, first of all, enrich the data. So the data matters more than a token. Okay, create a token. I don't want to spoiler my intervention later, but yeah, I will focus on that. Okay, token, it's easy. Also the liquid asset. I mean, let's define a liquid asset. Most assets are liquid because you don't have enough data to evaluate them. We will tokenize soon notes with the real estate collateral. Very great tier one real estate operation. I think that, I mean, they will buy all the token in less than 1 day. Okay, there will be in Ibiza. So, I mean, if you have enough data to evaluate the asset, if the underlying asset has a value, here the blockchain can help you a lot. To do basically two things. Cut information asymmetries, because it's, I mean, it's the king of a liquid asset, the information asymmetries, okay? And the second is, as Silvio was saying, present this kind of assets in a new way to the retail. Because at the end of the game, we can work with the institutional, whatever, but it's a retail game. Okay, this is the only market, the Web3 market is the only market that is pure retail. Okay, yeah. And it needs to be that. But to do that, we need to make, I think, still a lot of steps to make safe, secure for retail to invest in such, let's say, particular and more sophisticated asset, because it's not a Bitcoin. Invest in a pension fund is not invest in Bitcoin. Okay, so you need to understand what you are doing. But the data is the only thing that can solve the problem.
Makes sense, absolutely. Staying on the regulation logic and framework, I would like to make a question to all of you, because I would like to hear a different opinion about this. Because one of the most important challenges regards the regulatory framework. So what are the main regulatory challenges facing the tokenization of real world asset, and how can they be addressed, and how you are addressing them? Because we are different. Lorenzo, it's in Italy, so different backgrounds. So yeah, with regulatory difficulties.
So first of all, I left America. That was
that
was the easy answer to, because this was in 2018. We were sort of very clear that the American securities regime would not give us the ability to exploit the blockchain for what it is. Everything that we see in America right now is basically built on alternative trading systems. And these are basically batch auctions, but not real incremental price discovery. You can't take one asset from one to the other marketplace. So it's not really a blockchain-driven market. We've been for 4.5 years now in the European, specifically German regime. Now we're in Italy and Austria and heading towards MiCA. As much as I'm a huge proponent of what's been happening, and I think it's going to give a lot of clarity into the market, there's a lot of inconsistencies that exist, and you touched on that a little bit, right? I'll give you two examples. One is the current definition of a crypto custodian under MiCA specifically is for crypto assets, right? But all the use cases that we speak about are not crypto assets. They can be defined as crypto assets, and some regulatory bodies do so because they have no good answer to that question. But the question is, what are easy to use cases where you have a custodian, which we need to actually drive further adoption? How are we going to deal with that you cannot have a crypto custodian holding those assets? So you almost have to drive the institutions and everyone who wants to adopt in this space into self-custody. Because that's anything else is not possible right now under these regulatory circumstances. I'll give you a second example. We talked about data, and data is obviously the key differentiator here in many different respects, and we have a lack of actually good data examples that have been delivered so far, but this is going to define the future of this space. Now, under European data law, and GDPR being one of them, you have the right to be forgotten. You know, any document that you put on any kind of decentralized infrastructure which contains a name is basically something that has to be deleted or deletable, which obviously if you put it on IPFS is not possible, right? Secondly, if you actually have a settlement system that is built on public blockchain infrastructure, you know, we do everything we can to connect identities with different wallets, and we make that easy to connect whatever wallet you choose with your identity, so there's no correlation between the two, right? But in the end, if we were to build a really good system, we would have to use zero-knowledge proofs and basically hide not just identity with a transaction, but also hide trade sizes, trade offers, so that the system cannot be interpreted from the outside what block trades are being done, right? If we go down this route, we will immediately fall into the tornado cash situation.
So
So we're getting hugely conflicting opinions by regulators right now, saying, oh, on one hand, we want you to be data privacy proof. On the other hand, we don't want you to do that.
I see. Privacy is another topic that I hope we have some time to talk about. Thank you.
And so how's that going to be resolved? Time will tell.
Time will tell.
Yeah, I think in Europe we always say innovation by regulation, no? It's something that also in this case is like really real, because we have two different regulations. One is a pilot regime, the other one is MiCAR that is coming. Pilot regime is, I think, from March 2023 at Milori. We also have, we have MiFID, but we are trying to shift this. DLT pilot regime is trying to regulate something that is not so easy to regulate, because they want to, in my opinion, that's my opinion. Regulators want to maintain a similar structure as is of the traditional market, and mirroring on the blockchain, which can be done, but just in a part. We cannot have the same roles, too much roles in the capital markets like this. So you cannot have the same roles because it's not the same technologies. So that's important. So pilot regime can help to start something, doing something about that, and it's really important. But on the other side, maybe in 1 year, this type of regulation is already old. We already cover up all the points that are related to clearing houses and similar. So why do we need this type of factor? And on this side, on the MiCA side, I think it's really important to have a regulation on crypto asset topic, because we are talking about money. We are talking about a market that is growing and growing. So having a regulation is okay. But also on that case, we need to better understand. I would say how MiCAR can impact all the market, and should MiCAR impact in a bad way or in a good way? This is the real question, because in 3 months we have the answer. Time will tell, as we said. But same of DLT pilot regime. I don't want it is a regulation that is already old for the technology, because the technology is running really, really fast, and the regulation, I don't know if it's running really fast as technology. So it's that.
It's not.
Yeah.
But thank you.
But time will tell. Time will tell.
I mean, in a while, my intervention, I will explain, according to us, why tokenizing a real-world asset is a mess. But let me focus briefly on the inconsistencies. Now, basically, apart from MiCAR, we are following the MiFID II, okay? Because the DLT pilot regime is a pilot. If you need to work like us with financial institution that needs to allocate investment in long term to do something, the pilot name doesn't help. So we are quite lucky, probably the first time in history as a European to have at least a common framework. But at the end of the game, the crypto are really easy. It's simple. But when you need to put a distributed ledger into the MiFID II, believe me, it's a mess. Okay, you need to find the best compromise and adapt what really a smart contract can do, balancing to MiFID II on one side and GDPR on the other side. Just to make a very precise example, when the national regulation came up, last December, we raised our hand saying, okay, this is an inconsistency with the GDPR. So you are obliged me to put on chain this kind of data, but this is a GDPR data. So what should I follow? And also because, it's hard for the financial institution, for the regulator as well, to embrace and understand something that is born to be totally unregulated and totally decentralized. Because this is the thing. This is the hard part, and let me say also the interesting part of our work. Okay, find the common ground. It's very slight. But, we will make it. Sooner or later, we will make it.
Of course, I agree with all of you guys about the questions, about the answers. I can speak about the finance sector, which is one of the most regulated in every other sector. So it's very difficult to build new products. The real problem is not the regulation itself. It's, of course, to build a product in the asset management sector, for example, you need to focus on different regulations. So UCITS, you have taxonomies, you have MiFID, GDPR, and so on. So it's not only one regulation. Of course, in Europe, we have the LT pilot regime that could be a real framework. And it's the first one, so it's a great opportunity for us in the space to operate and to imagine new products. Of course, we are living in a sector in which US does and Europe regulates. More or less the same sentence of Lorenzo before. So what are we doing? We are trying to understand all of the frameworks and how we can interoperate with all the frameworks, the new frameworks and the old ones, in order to build a new product that respects all the regulations. But it's very difficult. So at the moment, it's difficult to see real examples of tokenized assets in Italy. For sure, in Italy it's really difficult because we have even another regulation, which is the Decreto Fintech, more or less the same, the DLT pilot regime, but it's another regulation to respect. And of course, the technology is moving on really fast, so the regulation is kind of outdated just right now, and there is another pain point for the industry. We are studying all the topics around the creation of new products. But at the end, you have to help the retail investors and make him protect from his investments. So it's really difficult because it's when you speak about finance, you speak about a very sensitive topic for the clients at the end.
Yeah, absolutely. Thank you very much. Absolutely makes sense, and thanks for the replies. I will have a last question to all of you. Then we're gonna give the chance to some question in the audience. We're gonna go back to the point where we started, and I want to ask, what are the next steps for the advancing and the adoption and implementation of real-world asset tokenization? So give us the big picture, where we are going, and what is your point of view of this adoption coming in the next years? Please, Philipp.
So I'll touch on three things. I think, first of all, with all the undercurrents of regulation that we've been discussing, So we have come to the conclusion that there's a way to build a sort of a peer-to-peer offering system that allows also securities on the blockchain to be offered from one peer to the other. I think we have enough clarification, not just in Europe, but elsewhere as well, on the issuance side. So I think it's undoubtedly that there's a prospectus regime, there's different ways how to issue. That's not the issue. The issue begins actually when it comes to what are the trading venues, how do you deal with custody, et cetera, all that kind of stuff, right? So we believe that the markets are going to look somewhat different than Uniswap. They're going to look more like, you know, billboard systems on steroids, where you as an individual can say, you know, I'm offering up my asset to maybe some qualified person on the other side, but you define how that person is qualified. And then basically the price discovery happens within that transaction, but it's not the platform that is doing the price discovery, but it's actually the offer system that is doing that. So that's a key thing to actually drive the ability to have a market, which, as we discussed before, is one of the key benefits of actually tokenization. The second thing is, I think the custodianship has to be clarified pretty soon, and it will, I think. But with that, I think we'll see a lot more use cases that will like smell, look, and feel for anyone involved more like Web 2 services. Because then the investor doesn't really have to know what a wallet is, what a sort of how that functions. Maybe the trade execution is not really something like MetaMask is horrible from that perspective. So I think that will, from a complexity perspective, be hidden away, which will allow a faster adoption. Abstracted away and build good consumer experiences as a result of it, whether that's for the retail customer or for the sort of institution or something in between. That's something completely different. And the third thing, I think that, so with this wallet infrastructure being cleared, I think we're going to see like very unconventional participants in the equation come to play. It won't be necessarily the financial institutions or the exchanges or the traditional way how we think about a financial transaction, but it will be more the digital wallet providers from the Web 2 world that are already in our phones, that are already, like, if you look at, you know, the eToro example or the Robinhood example, are already actually giving a very easy way for someone to comprehend what they're doing and engage. But that will extend much further deeper into those kind of infrastructures, and that will drive a huge adoption. We as participants and protocol developers, we might be in the back end, but the front end will be just within the phones and, you know, be a good experience.
Yeah, great. Lorenzo?
Yes, thank you. First of all, I completely agree with you, especially on the custody part. I think that institutionalization of custody, especially if we talk about security token and we talk about tokenization of financial instruments, so it's really important to like shift that. So from the crypto custody as we intended sometimes, especially some times ago, like Ledger and similar, yeah, we need to be like a more to Web 2 services on that. So because people that like stay in the crypto market from like years ago perfectly understand how it works, but may have private key, but I mean, not all the people knows that. So Web 2 services Swift is really important in my opinion. And second part, as I said before, secondary market. Secondary markets are really important because if I like take a tokenized part of real estate and then I cannot sell to anyone, I'm not creating a liquid market. I can put this wall in my house too, and it's the same because I blocked in my wallet. I don't have like the liquid part, so it's important. Secondary market, it's the real important part, I will say.
Great, thank you.
Okay, I think that it will, unpopular opinion, it will take longer than we expect.
A few change generations has to come.
Not so long, not so long. This is for the tokenization of land registry, probably. My nephew will see it. It will take longer, but it will be probably bigger than we thought, even bigger than the Boston Consulting Group report. But to do that, you need to build, and now the industry is building. All the institutional players are building. We will be soon in the Digital Asset Week in London, and probably we are like 4 startups, and there will be all the main financial institutions of the world in that venue. So it's a good sign. But the main thing are digital identity, I think, for sure, user experience, and a real cash leg on chain. These are the main train pillars to move on. Otherwise, I mean.
Thank you.
Yeah.
Thank you.
Yeah, for sure, the blockchain is going to disrupt all the finance industry because it is the technological stack behind all the new assets that you can create and the traditional assets that already exist. So it's a long way to change all the way in which we are considering finance right now. For sure, the user experience is going to be one of the most important, in my opinion, because as I was saying before, finance for people is a very sensitive and important thing. So whenever you are going to log into your bank account, you want to have everything in order, everything clear, a really great user experience, just because you are seeing exactly your wallet, you know. So digital identity is for sure one of the most important topic of the blockchain-related space. User experience, and one of the most important for the asset management industry in particular is that the focus that we will see in the next years is the interoperability with the traditional finance platforms, so like Bloomberg, for example, and the new ones, and maybe the blockchain itself, in order to have the cash leg on chain, the asset leg on chain, everything on chain, in order to optimize all the supply chain. Anyway, in Euromobiliare Asset Management, we are really happy to say that we are moving on exactly in this direction. In fact, we're going to start a project, a strategic study, exactly for this purpose. So to understand how we can interoperate and we can develop something new. We're going to do all this strategic study with Lorenzo and Block Invest, so it's really important to us to make it real.
This is a spoiler.
This is like a quite spoiler.
Okay.
It's written on chain.
Okay. So
it's written on chain.
transparent.
Really? Polygon? Nice.
Yeah. Oh, thank you very much. So everyone, I apologize, we don't have much time for the questions, but I hope our speakers will kindly reply to the question afterwards, because we have to move on. But thanks a lot for replying to our questions, everyone. Let's give a round of applause.
Thank you so much.
Right now, thank you. Right now.